Hello friends, and welcome again to the June video newsletter for the Russ Phillips team at Keller Williams here in Georgetown, Texas. Today we're going to talk about automated calculations as they pertain to property values. Now, a lot of folks have been raising a lot of cane here lately about their tax appraisal. Those have come in the mail recently, and a lot of folks are fighting it and that sort of thing. And I'll tell you that those valuations are done as a mass appraisal with a computer algorithm. There is nobody that actually studies each individual property and looks at the nuances. And in fact, at the tax office, they don't even look at the inside of your house. It's all about how the outside looks and what size it is and what other stuff they think or their computer thinks was the comp. So you can have some great success if you go in there and demonstrate that you know more than the computer does. Well, the same thing is true with online home evaluations. Companies like Zillow love to throw out the Zestimate, and I think a lot of folks may be putting a lot of stock in that. But what you need to understand is that for the tax office and for Zillow and really anything else online, Texas is a non-disclosure state. Now, this is different from a lot of places around the country, but in Texas, we believe that what you sell your home for is your own private matter. And there's another aspect about this too. If we start disclosing sales data in a public database, then the risk you run is that our legislators and politicians will start looking at how much tax revenue they could generate with a sales tax on real estate. So try to imagine selling your home, maybe $150,000, maybe $550,000, and they attach a 2% sales tax to that. Now, that would make things terribly expensive and probably have a dramatic impact on the market. We believe that that money should be in your pocket and not taxed. So that's why Texas is a non-disclosure state. But the fact that there is no public database to give these entities the sales data means that whatever algorithm they're using might be right or it might not be. And if you like Zillow, I would encourage you to scroll down to the bottom of the Zillow homepage, and there's a link down there on valuations. In the fine print, one of those little links or words down there will take you to where they report on their own accuracy. Now, they don't talk about the Austin market per se, but they do hit the major metro markets in Texas. That's Dallas, Fort Worth, Houston, and San Antonio. And they report dismal accuracy. For example, they say that they are within 20% of the sales price about 60% of the time. I think that was for Houston. Now, let's boil that down to some real numbers. If you have a $400,000 house, they're saying that they'll be within $80,000 high or low about 60% of the time, and the rest they might not even be within that range. So you can't tell me that they are accurate in that kind of number situation. Obviously, you want something where folks have been in houses around, really studied and analyzed what the comps are, and can defend your value if you're selling, or can at least help you understand what you're buying if you're shopping. So I would encourage you to check out what Zillow reports on its own self and any other online source. Try and figure out where they report their accuracy before you trust any numbers. Always the best is to trust a professional who's been there, seen that, done that, and knows what they're looking at. Well, that's it for now. If you want further information or want to check out some listings online, you can certainly search most of the MLS through www.russ-phillips.com. We'll see you next time.